Our trading algorithmic portfolio is down 1.09%. We are currently running $30,000 on live trading and assessing its performance before scaling up. So, in this video, I'll go over the strategy's performance as I have in the previous videos, but I think it's kind of pointless to pick some of the trades that I'm going over just to highlight them. And I think there's more context in going over the back test and why we're actually running these particular strategies. So before we do that, our opening range breakout strategy on the futures market is down 4.8%. This is well within the volatility of this particular strategy. And while running this exact strategy prior to tracking it with this live trading log, I've seen days where with just one contract, this can cover our current loss in one trade. So I'm remaining optimistic, watching it closely, and basically diversifying through other strategies, and we'll be looking for more alpha or new edge as basically my schedule starts to clear up in about a month. So our next strategy is our 52-week high. We finally have gotten back into the green, or gotten into the green for the first time. And this checks out for our back test. So we'll see if this continues. But for now, we keep watching it and like to see what's happening. But are open for this to go back into the red because trades are distributed randomly, right? So we can't expect linear results or very linear results unless we're taking many trades. And Mag 7, this strategy, the whole point of it is to outperform the S&P, focusing on the Mag 7 while being not involved in the markets as much as being fully invested to the S&P 500. So I'll go over that, but let's get into some of the back tests so we have an idea. I guess it's not really the most orderly, but I will share some insight. So this is some of the code just for the back test, not the actual live trading. And essentially, it's kind of a clean strategy in the fact that, right, although there is a lot of volatility, it kind of makes gradual steps and is quite clear as to how this plays out. So long that the markets go up, in my view, this algorithm should continue to capture some edge. And the reason why we do like it is because obviously we're using leverage, but the annual return over a 5-year period is 79.38%, right? So alongside that, you are taking a max drawdown of 27%. And this was post-COVID, or actually, this experienced COVID because it was March of 2020, but still, it's in line with what the S&P has done on a drawdown, but you're actually juicing the returns. So we'll continue to run this. It is volatile. I'm not too concerned about where we are now, but if there is reason to be, then obviously I will be. So the next strategy that we are running is, I believe I have it here. So this is the 52-week high momentum strategy, where the core idea is we're buying strength with high volume on new highs. As you can see, this is another 5 or 6 year back test where we're comparing it against the S&P. And as you can see, the time in the market is 93%, meaning we're pretty much always in a trade. And that checks out based on how the algorithm is actually deploying these trades and automatically executing. And over this time period, we outperform the S&P 500 basically by 2. So in terms of the risk, so far it's checking out. Our max drawdown over this time period is 3%. I don't think that's necessarily accurate or so precise. I think there can still be a variance of that because a stock can absolutely gap down. But one way to manage that is basically just increase the amount of trades you are willing to have at one point in time for this particular strategy. So this is basically just a simple tear sheet with quant stats, which is a great library for back testing strategies. And we're basically getting a 2.3 Sharpe ratio, and we're running this live. And obviously, this can change, but and I would welcome it because it's good mental resilience to allow the algorithms to execute. But basically, this was red for not so long, and then one or two trades kind of brought this back into the green. So I think you could see here, these are the returns. This is the actual strategy that's being traded. And then over the last basically week, Moderna and Target were two strong winners, which basically recouped a good chunk of the losses. So many trades there. And then the Mag 7 momentum. Here's the tear sheet for this one. Basically, time in the market is 27%. I would preface that this particular strategy is obviously including look ahead bias, right? At this point in time, you wouldn't know what the Mag 7 is. Well, you actually would. You can easily determine this just picking the best 5 to 10 companies in the markets and then being involved in them only when they are showing rejections to the downside, right? So essentially, by doing so, and this is more of a strategy that you would play if you believe the Mag 7 will continue to grow their earnings and the markets will continue to have liquidity, right? That's the way I see it. And same with my business partner. So if you want to have exposure to the S&P 500, but you want to focus on only the best companies and only really be in them for about a third of the time, as opposed to being 100% tied up into the markets, this is another nice strategy, which slightly outperforms the S&P 500, but you're just not in it as often, which increases your risk-adjusted returns. So these are the three strategies that are being run at the moment. There will be a point in time in about a month where I will be heavily researching for more strategies and more edge, running backtest and hopefully integrating them into these systems. So if you are curious and would like to follow along, please subscribe. And if you want a question to be answered, write it in the comments. Thank you for watching.